Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
How's it going out there? It's February 14th. My friend Curzio, just the Wall Street Unplugged pie. So break the headlines and tell you what's really moving these markets. So on today's show, Bitcoin surges to a 2-year high and is now part of the $1 trillion asset club. I'll explain why we're still in the very early innings of this monster run in crypto. Very early innings. Lyft reports earnings and has a big typo in the press release. Shouldn't have been that big of a deal, but I'll explain how Wall Street profited greatly from it. And CPI comes out showing inflation's back. What happened? It's supposed to disappear. Does the Fed's next move gone from 7 rate cuts coming in 2024 to possibly another rate hike? Now, first, let's start with the most important topic by far, which is Happy Valentine's Day. For the mothers, wives, daughters, great day. I have 2 daughters and a wife. My daughter turned 16 on Monday, so I had a birthday to celebrate. My mother, I won't tell you what age she turned, which was yesterday. And then I have Valentine's Day. My 2 daughters and wife. So if possible, I was going to ask if you guys could buy some subscriptions so I could afford all this. It's nice that it's all in one, as a guy, one just chunk. It makes it a lot easier than, oh my God, this is coming. Holy cow, this is coming. Because, always not that good with dates. But yeah, happy Valentine's Day to everybody out there. It's so great. I really like this holiday. It's really cool. Hopefully you guys have a great time. Go to dinner, happy, roses, everything. Have a lot of fun. But it was funny because even with my mom and her birthday, she actually chimed in to our crypto event. So we had Crypto 2024 last week. Had a lot of people attend. It was really, really cool. And she asked something because we had a 90-minute Q&A, and she was like, hey, you coming to my birthday? So I'm getting trolled by my mom during these live events, which is pretty cool. But for any of you guys that missed that, please, it's for free. Go to CurzioCrypto.com. It's really cool. It shows you what's going on with crypto today. Something that we've been well ahead of over the last 6 months, saying the ETFs are going to get approved. And then 2 months ago, we did our first Crypto 2024 event saying, listen, you got to be in this. We're going to see Bitcoin run up. It's probably going to sell off a little bit, right? Sell on news after the ETFs, but definitely use as a buying opportunity. Now we're seeing Bitcoin into the $1 trillion asset class. It's ranked as the 10th largest in the world, just surpassed Berkshire Hathaway. Okay, this is real. This is big. It's here. And the event we had last week I called the super halving because we know the halving is coming up in April, which is a big event because Bitcoin usually surges. And this is 12, 18 months after. But I call this the super halving because for the first time ever, and not only are you seeing halving, why does the price of Bitcoin go up, is because you're reducing the supply growth in half, making it harder for the miners to mine for Bitcoin. When you do that and keep demand steady, prices are going to go up. That's what happened every 4 years. If there's halving, the next one is coming in April. Why is it different this time? Because after 2 years, we always saw Bitcoin sell off because demand kind of waned, and you're not going to see that anymore. This is a secular growth trend. Get used to this. Bitcoin 52,000, Bitcoin getting new highs, CNBC talk. Get used to it. But the big story here is not Bitcoin, because as Bitcoin goes higher, it's just like if Apple goes higher, if Meta goes high, it brings a massive group of companies that support these platforms much, much higher. AI is bringing everything higher. A lot of technology, a lot of software companies. You're seeing the difference in companies, especially within the chip sector, of ones that are doing great from AI and some of them that don't have exposure that aren't doing that great. Who was it? Latsi 7 didn't report good numbers. Intel. It's not all chip makers go up, but when you see Bitcoin go up, and it happened after every single halving, everyone points out, wow, look at Bitcoin's run. Look how much it went up. On average, this is the last halving 4 years ago. Bitcoin went up an incredible 600 and something percent. Over 600%, which is amazing. What you probably didn't know is that the crypto market, if you strip out Bitcoin, outperformed Bitcoin by 3 to 1. It went up over 1,800%. So now what you're seeing is today, MicroStrategy's up big, right? Now that Bitcoin's breaking out even further. You're seeing Robinhood report numbers. Did you see those numbers? It's not going up because they're just in crypto. They said that they're getting their deposits or the money coming in, right? The inflows are the largest since 2021. It's real. You're seeing all the miners up 15, 20% today. And that is nothing compared to the names you're seeing within the crypto market. Because these things go up 3x, 5x, 10x, much, much more than anything else. This is why I've been pushing this and saying you need exposure to this industry. It's not just fun and games. I saw Gary Gensler on TV. Again, we understand. He's part of the system. He's part of the central banks. He's part of that, right? His job is part of that whole system. So he's going to hate on Bitcoin as much as he can. That's his job. It's Jamie Dimon's job to shit on it. It's Elizabeth Warren's job to shit on it. They want control. Central banks, all this. Well, the reason why they want control is because they all make a fortune off of it. All these freaking bullshit fees we get charged with banks and transfer of money and all this stuff. And why do we need that when we have something that keeps a ledger that you can't hack? So our Crypto 2024, our recent event, Super Halving, for free. Go to Curzio Crypto. Watch it. It was really good. It was 90 minutes of Q&A. And anyone who wants to learn about crypto, listen to it, because we covered simple questions like where to open an account, how to keep my crypto safe, how come I have to purchase on different places, what is staking. Yeah, and that's what we want to do, provide that education for you. This way you can get into this industry as someone who's covered speculative assets my whole entire life and my whole career. I've never seen a better risk return than in crypto. And it's speculative. I tell everybody, don't sell your house and go into crypto. No, but if you're buying small caps or you're playing options and you're doing all this stuff, that's fine. But have exposure to crypto, because crypto, the upside is magnified by 10 times, even more, compared to what you could earn some of these small caps, and especially new ones that come out, which come out at multi-billion-dollar valuations, and a lot of that growth is already priced in. Where you could buy some of these cryptos. 5 new recommendations I just made last week in our Crypto Intelligence newsletter. 5 brand new ones. I've never recommended 5 at the same time. Those who are subscribers know that. To all my products, maybe I'll have 1 or 2. Last time I recommended 5 stocks was at the bottom, right after COVID, the COVID crash. The 5 best companies and saw them decline tremendously. I think it was Walmart, Target, Costco, Home Depot. I forgot the last one. Only 5 stores that were allowed to be open at the time, that we're just going to see windfall profits because they closed everything else. But now's the time for crypto. And those 5 recommendations in crypto intelligence come from AI. You want to see the amazing technology. I know you're hearing about it everywhere. Try open source DeFi, where people could add to these programs and make them absolutely fantastic, where they're not behind walled gardens. Like, everything that you're doing is crypto is the same thing that you're doing when you post on Facebook. Facebook owns everything. The social media companies you put, they own everything. Imagine that you didn't have to own everything. That's pretty cool. I mean, hey, if you're going to steal my data or take my data and sell it to third parties, how about I make money for it? There's crypto companies that are doing that. There's community aspect. That's part of the recommendations. Connectivity. Blockchains don't talk to each other. That's why you're seeing all the hacks. For people who don't understand crypto, like, well, I'm nervous about that. You see the hacks because if it's going from one blockchain to another, there's bridges. And in that bridge, to make that work, that's where all the hacks take place. Now there's technology where there's no more bridges. It's going to be seamless. This is where the technology is coming from. So as Bitcoin goes higher, you're seeing the rest of the market go higher. This is why we've been pushing crypto for the last 6 months, but this is just the beginning. We didn't push it because, hey, Bitcoin's going from 15, 16, 17 grand to 52 grand. No, that's not why. So in that presentation, if you get a chance, watch it. You could put it at 2 times speed or whatever. It's pretty cool, but the questions were fantastic. It was great. And plus, we offered a special for our crypto intelligence newsletter, which is 80% off, which I almost never do. And I only do this because this is the area that I believe you can make the most money in. And if you do that, you're going to be a subscriber of mine for the next 20, 30 years. So much so that anyone that subscribes gets a 10-minute phone call with me personally. And that's a big part of our company because I talked to 100 new subscribers probably over the past couple of months. And I know that a lot of other services in our industry are not going to offer that. The guys whose name's on the door is not going to get on the phone with you. And when we do that, it's door to door. It's how so many companies built their business. And that's what this newsletter industry is about. It's about being personal. Like, people want to turn to you because they don't believe all the shit that goes on Wall Street. And now the financial newsletter industry has turned into Wall Street and profits, and nobody cares about returns or the customer. That's bullshit. It's the reason why we have a strong brand. If you're interested to learn about crypto, again, try. I understand people want to learn about things that are really complicated and hard. It's not that complicated. We break it down, provide it. Even watching that 2024, again, it's for free. Just by watching that event, the Super Halving event, and you're going to see why this is just the beginning. I mean, you're going to laugh when you see Bitcoin at 150,000. It's at 50,000. It's going to go a lot higher. It always hits a new high after the halvings. The last high was, 66,000, I think? And when that happens, you're going to see a lot of the underlying cryptos absolutely surge, because these are names that you can get in at $20 million, $50 million, $100 million valuations, not $5, $10, $15, $100 billion valuations like people were forced to get in when Coinbase went public. Holy cow. I mean, that stock's been on a tear. It's still 40% below its IPO price. And it was up 300% last year. That's the stock market for you. That's Wall Street for you. Collect their fees. So CurzioCrypto.com. Give it a listen. If you want to learn, send me questions to FrankCurzioResearch.com. Again, I'm pounding the table on this for a reason, guys. My job is, what I get paid for is to make you money. That's it. I'm not getting paid by companies or recommend them. We're independent. So if I make you money, you subscribe to more products. That's why I push my products at the right time, even right now. Right now is an unbelievable time to own Bitcoin, to own Ethereum, and to own almost anything within crypto, because every single event that takes place going forward. And you're like, well, what are you talking about? What kind of events? I mean, if you're looking at Middle East tensions, geopolitical risks in the Ukraine, Taiwan, China, which is going to be a big story this year, the elections, gridlock, all that stuff factors into Bitcoin. Every time you see central banks spend trillions when they say, hey, we have to cut back on spending and constant approvals and constant money going to Ukraine, constant. It's the case to own Bitcoin. Every time we see confusion on the data like this, CPI is supposed to go lower, and the economist yesterday went on and said, I'm expecting this to be even better. Inflation's coming down, and out of nowhere, inflation goes higher. Strengthens the case for Bitcoin. And these are just a few of the topics that you're going to see over the next year, over the next 3 years, over the next 5 years. And now couple that with the ETF approvals, which you're adding trillions. I mean, you're looking at $30 trillion now has easy access to Bitcoin that they never had before. And if you just take 1% of that, of all that money, it's going to add up. And I had charts and figures and stuff like that of the exact amounts. And this was in the Crypto 2024 live feed. Again, that was 100% live. But it amounts to over $600 billion of inflows at a 1% allocation for people. Just a 1% allocation. I think it's going to be more than that. I don't think it's going to be 5, but I do think it could be 2 or 3. And if you broke that up over 10 years, $60 billion flowing into Bitcoin, and then what do you have on deck? You have Ethereum ETFs that are probably going to get improved, I would say June, July. And we were pretty right on the approval schedule and when it was going to happen. I provided the schedule because we were able to see and track when they apply, and it's the first time, the second time, and when they're going to get answers by the SEC and stuff like that. This is an area you should have allocation to. Don't put all your money into it, but you should have allocation because it could change your life. Those are the gains that you could see in this sector. It's a lot of fun right now. It's really cool. And the best part of it is I love to see my subscribers making money, and they're doing very, very well right now. So moving on. Well, we have inflation. Holy cow. Is inflation back? Because you look at the CPI, one of the Fed's biggest inflationary gauges, came out pretty hot, and it wasn't supposed to. The report was really crappy. It showed, when I looked at it, right, you see, and there's a lot of economists that are defending it right now, which I think is funny, but saying that it's a one-off, and, I have some names of economists I'll share with you in a minute, but when I looked at this report, you want to dig through it, because you can always say, okay, what's going on under the hood? And people say, well, rental incomes are higher, and that's, misleading. It's going to come down. We don't understand that. And, let me tell you what I saw. Okay, because this isn't retail or apparel discretionary going higher, right? These are items consumers can choose not to buy or purchase at a later date. But when I bring this up, again, if you're going to watch this on YouTube, I just have a little bit of a chart up here. I mean, you're looking at food up a ton. Baby formula. You're looking at frozen vegetables. You're looking at your meals, snacks. Then you go into electricity. Then you're going into streaming and cable and TV, right? These are things that people have to pay. You're looking at auto insurance was up huge. But garbage and trash collection, these are the things that went up the most in price are the things that everybody has to pay. These are bills that we are paying directly. So you could highlight, oh, well, it's a rental component. It wouldn't have been up that much. Even if you take out that rental component, no matter what you say about this CPI, and I don't care if the rental component was that bad and it came down because it accounts for like 30% of the fucking CPI. And the only reason why is because the government fixed it that way. This way you'll never, ever see inflation ever. I mean, they got, again, I'm going to curse a little here. Heads up. But they really got fucked because they decided to pump $12 trillion into the system thinking, oh, it's not a big deal. And half of that came when asset prices hit all-time highs at the end of 2020. And a lot of this money came in 2021. Just keep spending. If you go back the past 30 years in the last inflationary, and how many times this gauge has been revised, I mean, they push shelter in there because rental properties really hardly ever go up. It's a reason why inflation has almost never gone, the CPI has almost never gone over 3%, 3.5%. Very, very rare. I think even if you look at 4%, which we're at right now, basically, if you're looking year over year with 3.9, I mean, we've gone over 4% on the CPI one time since 1991, other than when we just saw inflation the past couple of years. So they provide an index to show, and just proof of this is common sense. I mean, even before COVID, all your fucking bills were going higher. Everybody's bills were going higher. Now they just went incredibly higher. And everyone said, oh, there's no inflation, there's no inflation, there's no inflation, there's no inflation, there's no inflation. Okay. Really? Because all the bills I'm paying are a lot more. And that's the point of this report, is why it's so scary. Because a lot of the report showed increases in things that these are every month bills. That's a big deal, guys. So what does that mean for the Fed? Well, one, believe in Powell, because he's been saying, look, we're not even close to cutting till we see more evidence. This takes him a step back. We're going to see another 4 CPI reports until next time, or the Fed meeting, and I think the percentage going into this for a May cut. Remember, we were definitely getting a March cut. Remember when the Fed pivoted, and that was in December, and they were like, oh my God, we might get one right away, right at the beginning of the year, but definitely in March. That's like 0% now. There was a 70% chance in May we're going to see our first rate cut. That's 40% now after this report. So what happened after this report was released? The market absolutely crashed. 1.3%. 1.3%. If you watch CNBC, you would have thought there was like the place was on fire. You would have thought that whole building was on fire. What are we going to do? How do you position for yourself? We're down 1.3%. Keep in mind, going into that report, okay, you look at what, November? We are up 14% going into this report and take a 1.3% back, and you would think that we crashed 30% yesterday. I was watching CNBC. Oh, you got to position yourself. You got to do this. You got to do that. In the meantime, all the economists, right? There's so many economists coming out and saying it's a one-off. It's seasonality. It's seasonality. And these are one-time price increases that take place in January. I mean, I'm forced to read all this shit, right? The economists that lock themselves in a room and have no friends and don't understand anything about the real world. My job is to read this and interpret it to you. Okay? So these are the guys that were telling you that inflation is going to be transitory 2.5 years ago. The same guys that really, again, they don't get out in the real world. A lot of stuff's paid for them. They hang out with rich people and stuff like that. We're talking about real world, real people here. Okay, what we see. And that's why you have such an advantage as an individual investor compared to these institutions. You can get in and out of some things a lot quicker. You can react a lot quicker. Having this podcast and going out to 100 countries is amazing because we get real-time data when people are getting it a month later, I feel like, especially when it comes to What are you seeing in stores? What are you seeing in malls? What are you guys seeing in different countries? What are you seeing during COVID? I mean, just getting emails from everyone in different industries saying, hey, these are the trends I'm seeing. I mean, this helped me a lot in 2021 when the market was still doing good. People were like, hey, business is still booming. It's still booming. It's still booming, even though we got really expensive because earnings weren't growing, but stock prices were going higher. But you fast forward today, and holy cow, we're looking at the 10-year surging. Was it 4.3%? It was 2.8 2 weeks ago. That's a monster move. Valuations at all-time highs. Consumer sentiment on housing, pre-CPI report, because rates are a lot higher, was the highest it's been in 2 years. And pre-CPI report, the VIX. Nobody's scared. So when you see a report like this and you see the market come down, again, small caps got nailed and NASDAQ got hit pretty hard, but overall, the S&P 500 did pretty good. That 1.3%, it's up 0.5% today. Oh, my goodness. What happened? Now we're going to go bullish again? But we're in a market that's priced for perfection here. And any little blip is going to result in a pretty steep decline. And you're used to seeing a 700-point decline in the Dow being big. It's not because it's up so much. It amounts to what, 1.5% or whatever? It's nothing. That's really nothing in the scheme of things, especially you would expect a normal pullback of 5% after the market's up. Not only is the market up tremendously, say close to 15%, right? It's just, what, 1.5% off its all-time highs. But think about where 7% of that move came from. It came from in the second week of December when Powell came out and hinted and suggested that was the pivot. Here come the rate cuts. And then we went up tremendously. Went up 7% from the second week of December. Again, we're here second week and we're talking 2 months ago. But now that thesis has been pushed out, even by the Fed themselves, where they all rolled back that opinion, said, no, that's not what we meant. You know, they met behind closed doors and said, all you guys, I know you guys like to shout and speak and go to conferences. Here's what you're going to say to the public. This is what happened in that meeting. Here's what you're going to say. You're going to say that we're not even close and we're not pivoting anytime soon until we say the data. And everybody came out with the same message. Kind of like when we watch in mass media and it's exactly the same line that they say, right? They all say it at the same time. It's like they all get into a meeting and okay, this is what we're going to say. That's what happened the last Fed. So they walked that back. Now you get a CPI report that's big. Shouldn't we give back the 7% that we gained because we're expecting rate cuts pretty much now? And that's what I think. But no, 1.3% decline like it was the end of the world. Get out. Oh, man, it's crazy. And we're back up again today. Pretty cool. Even though rates are higher, right? So there's a lot of risks in the market right now. So when you look at, and just a quote where David Royal, CFO, CIO of ThriveNet, saying the seasonality thing that I mentioned impact these results. Annual price increases can take effect starting January. We had Ian Shepperson, someone that I do respect. He's a pretty good economist, but also said this is a blip. The inflationary trend remains intact. Is it? I mean, it's a blip that nobody saw coming. And I can tell you from the Fed sentiment, where they're like, hey, maybe if we get one more good CPI and another, we're good. This sets them back. This sets them back in terms of rate cuts. And we're going to have to see really horrible data going forward. And when I'm looking at just some of the calls, did you see Coca-Cola? I mean, Coca-Cola came out and said, hey, we grew 12% organically, all because we're raising prices. McDonald's raised prices, but people starting to push back on raising those prices. But you're still seeing these rate hikes, and you all see them, every one of you. You're seeing every one of your bills still. Are your bills really outside of maybe gasoline, which is going back again, up again? We're in Florida. It's going over $3 a gallon. If you're in California, that means it's probably like $9 a gallon, whatever it is over there. But probably more like 5, 6. It fell below 3. Now it's going higher. Energy prices are going higher now. I mean, that was a big help. But other than that, are you seeing most of your bills are more than what you paid last month still? Where's the disinflation? When is this coming down? I don't see it. And when I look at a market that's priced for perfection, and you might say, well, why is it priced for perfection? Because it went up 14 out of 15 weeks. Holy shit. The market has gone up 14 out of 15 weeks. I thought it was going to decline this week. It might not even decline this week. I thought we'd have a shitty week to finish it after the CPI report. Let's see. And we're looking at Atlanta Fed, who is the best at forecasting GDP before it comes out. They were expected 1.9% GDP growth about 2 months ago. Now they're expecting 3.4%. Bank of America survey says investors predicting no recession first time in about a year. It was last April. I mean, is anybody scared at all about these valuations or where they're at? I mean, just a little, especially since inflation's not gone. The whole bullish thesis is based on rate cuts for throughout 2023 and definitely through 2024. Now we might not get them to June, midway through. So shouldn't we give back some of the massive gains? But we haven't yet. And the higher we go, the more dangerous it's going to be. I'm not telling you to run out of the market, but I am telling you, diversify, buy companies that have pricing power, that are growing earnings, and that are buying back their stocks. You'll find a lot of names in that group. Speculate. If you're going to speculate, we're doing a really good job picking away those names in the Russell 2000. Don't buy the whole Russell 2000 because 40% of the Russell 2000, 40% of those companies are not profitable. Those are ones that are going to get nailed the most with high interest rates staying higher for longer. Very difficult to refinance their debt. But there's lots of names, especially in biotech, we've been picking away. We had a 50% winner in a month and a half. This is when you need someone that knows what they're doing, that's looking at this stuff all the time. Because a lot of disconnects, and it's very easy to make a big mistake. And you've seen it just in earnings. I mean, earnings, you're seeing companies go up. ARM Holdings went up, what? 60% in a day, whatever it went up in a day. And it followed with another 20% yesterday was down. A couple of others, you see 15, 20% moves. And others, you see 20, Pinterest down, whatever, 20, 30%, Upstart down. You know, some of these stocks get nailed. So you want to be in the right names. It's very important to do your homework on these names going in. You can't just blindly, I'm buying stocks. Market's going high. Everything's going high. I'm a genius. No, absolutely not. Half of the S&P 500 as of today, even more than half, because this was before the CPI report. So I would say probably 300 companies out of the S&P 500 are lower on the year. Yet this index is up 5%. Because the big cap names are up 11%, bringing up the whole index. So be careful. It's not the whole market. I could buy anything. It doesn't matter. No, it matters. It definitely matters what you're buying here and what you're getting into. So be very, very, very careful. Now, last story here, I want to talk about Lyft. So Lyft reported earnings yesterday, and the earnings were great. The CEO was on TV, and I kind of like the CEO. A little weird. You know, when he asked about his numbers, he made another mistake and said, oh, wait. I mean, it was funny. But he actually said, he goes, I'm driving today. And he's in San Francisco, and he's going to be driving a car picking people up, which I thought was really cool. I didn't know what he meant when he first said that. He's like, oh, I'll pick you up or whatever. I can't. He goes, I'm driving, so I can't pick you up. I thought he meant he's driving another car. He's actually going to be in a Lyft car, and you might get him in San Francisco, driving you around. I thought that was really cool. But they reported great numbers, really, really great numbers, best in the company's history, and the stock soared. But then post-market, this happened yesterday after the close, and this is remarkable. So the stock surged 60%, and it was because that there was a typo on the press release. And the typo was a really, 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 really big deal. Okay, it said adjusted margin expansion grew 500 basis points, and they made a mistake. There's an extra zero. It's 50 basis points. That's a really, really, really big mistake. I mean, it's monster. Where, so the stock pushes up, rightly so. But for me, I'm fascinated by high-frequency trading, or the ability for just a few special elite firms to use super fast computers with super fast algos built by elite mathematicians who get paid millions to front run the market without any regulatory oversight. I'm fascinated by that. That is awesome if you're in that business. That's fantastic. And this technology was put to great use yesterday after the close. So in less than 3 minutes, the stock went up, and then the stock really soared. It really soared. It went through the roof, right? It went up tremendously. And then as it went up and that news came out, it hit $19 a share. Now, when it hit 19, they revised that news. Before, you could read it. This is 3 minutes. Think about how long it would take you to read a press release, go into an E-Trade account, whatever you're trading, go in, place the order, and hit that button. After you read the whole post, think how long it would take you to do that. This is less than 3 minutes. The stock went from 19 to 1270. It fell 33% in less than 3 minutes. 47 million shares of Lyft traded after the close. To put that in perspective, that was over 2 times more than the amount of shares traded the entire day when the market was open. More than 4 times the average daily volume for Lyft in the post-market. So my question to Gensler, who's on CNBC, who always says, we're here to protect the individual investor, just like you did with SPACs, and you regulate them now when $22 billion was taken out by insiders, when almost every retail investor got kicked in the ass, right? Now you're going to regulate it. Nobody goes to jail. It's perfectly fine, right? The whole pump and dump SPAC scene, everything's fine. But your mission to protect individual investors, I have a question for you. If high-frequency trading firms can trade millions of shares in milliseconds when the market is closed, how does this provide a level playing field for retail investors, mom-and-pop investors who don't have the same access? Because that doesn't sound like it's a level playing field to me. But you want to talk about how these firms work and how much money they make? Right there. They made a fortune on the way up in minutes and a fortune on the way down in minutes. Not even in minutes, in milliseconds, most of these guys. I mean, it's incredible. It's incredible how they're able to, how their systems are able. This is before AI. This is before, the last 2 years where, holy cow, AI is so fast and speed. 5G. I remember working for Kramer. Listen to me. He used to put out alerts, and they always came out after the close. And there was different lists, maybe 9 or 10 different lists for if someone had real money traders. So, just different lists that had access to it. So you'd send it out at the same time to these lists, but there might be a second differential. I'd hit enter, and some lists might get a second early, whatever. Before I got it, which the list that we're on, we have access, when you work at a firm, you have access to all the products. That stock will go up 3, 4, 6, 7%, right? Before I even got it, it was that was in 2007. Imagine what they're capable of doing now, how they're moving their firms closer to the stock exchange to get that extra 0.00 second difference to get into trades. That's where they're at. I mean, you want to talk about the ultimate boys club where nobody knows what's going on and nobody's allowed to say anything, whatever. There's no regulation, nothing. That's it. That's it. We're talking about Citadel and all that shit with dumb. What happened to them? Nothing. They even lied under oath. Nothing. What's about the ultimate boys club that's protected? I mean, that's the ultimate boys club. I mean, a lot of these guys want to be famous. Like you see Mark Cuban going out on TV. They want to be on TV all the time and hang out. It's kind of like John Gotti. They're like, what the hell are you doing? That's not what we do here. You don't want to be on TV when you're doing shit like that. And that's why you rarely see these guys ever on TV or doing anything. And then when they have to publish their 13 Fs, so, what they own every quarter, which, every firm is required to do. If you have, I think, over 100 million assets under management, they have 80 positions that they're not even in 80 of those positions anymore. They're just in and out. They don't even look at markets. They don't look at fundamentals. They don't look at anything. Quick. Just let's make these really quick trades, blah, 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 based on all the orders that people place in the market and what we see in front run the market. And it's perfectly legal because everyone's tied to those funds is making an absolute fortune. The teachers, the pensions, all that stuff, the politicians. Well, regulate it if it's making us money. It's really crazy when you think about it. Anyway, high-frequency trade put to work, and I thought that was amazing. I actually sat here and did the research. 47 million shares traded post-market when 21 million shares or whatever traded the whole entire day. I mean, who has access to that market other than the big guys? They do, and they made an absolute fortune like they always do, quarter after quarter. So, guys, very last thing here. I hope that you won my guaranteed bet because I took the 49ers to win the Super Bowl. And like I say, you're supposed to do the opposite of my Super Bowl pick every single year. It's the 4th year in a row I lost. I'm 3-10 in the last 13. The last time I won was the Eagles, which is cool, beating the Patriots. I will say, though, which I say when I do this, and I have this outline and everything, that my prop bets usually do well, and they did. I nailed it for good. I hit pretty good with Marcus Valdes-Scantling. That's MVS, they call him, as a wide receiver for the Chiefs. So I bet that he would get over 2 receptions and over 19 yards receiving. I should have bet him for a touchdown as well, but I won those 2 bets, but lost the 49er bet. So it's an ultimate guarantee, guy. I gave it to you on a silver platter. Told you, 49ers probably going to win by 7. They're a better team. I thought they should have won that game. It was a great game, but Mahomes just was too great. It was just too great. Stop beating up the coach. Stop beating up Schottenheimer. Stop beating up. I mean, he's one play away on a 4th down from, if Bosa chooses not to go after the run and go after Mahomes, he's basically going to sack him and the game's over, and everyone's talking about Andy Reid and what he did wrong. So, I mean, that's a coin flip of a game. So I think, could it change the outcome by maybe kicking the ball off instead of receiving it in overtime? And I get it. I understand that, but I know this defense was extremely, extremely tired, and that's just not an excuse. They just were on the field. I think Mahomes, with that momentum, would have ran down the field and scored. I mean, they would have scored in regular time if they had the time. They just ran out of time, so they had to kick the field goal. But great Super Bowl. And again, hopefully you guys won. And that's all I want to see for all of you, is you make money, even at my expense of looking like an idiot. So, guys, this is it for me. Questions, comments, email me, frankcurzioresearch.com. Anyone looking to see the free replay, which was a live event, my Crypto 2024 Super Halving, just go to CurzioCrypto.com and give it a listen. Lots of education there, really cool. And I know you guys are going to like it, especially since you're going to hear about crypto and Bitcoin hitting new highs probably for a very, very long time. So we'll dig more into this, more into ideas in tomorrow's Wall Street Unplugged Premium podcast with my buddy Daniel Creech. I'll see you guys then. Take care. Love this episode of Wall Street Unplugged? I think you'll really love Wall Street Unplugged Premium. The Wall Street Unplugged Premium is my members-only podcast where I dive even deeper into this week's events. Well, I'll do even more than tell you what's moving these markets. I'll tell you specifically what moves you can make today. So this is going to be about trading. Put big money in your pocket right away due to the inconsistencies I see daily in the market. I'm talking about specific investment ideas I'm recommending and tracking each week that I believe will be impacted directly by everything I just talked about today. Plus, you're going to get the chance to go even further down the rabbit hole with me and my co-host, who's Daniel Creech, as we discuss which of these week's trends could turn into massive windfalls. Could the big trends that we see lurking on the horizon, also the news we're picking up from our network of insiders, which has gotten bigger and bigger thanks to you and so many people listening to this podcast in over 100 countries. And you get a chance to talk to me directly in my special Ask Me Anything Q&A session. All of that and a lot more, like premium interviews with world leaders in finance, technology, industry, and politics. This is all part of Wall Street Unplugged Premium. And becoming a member is super simple and super cheap. So head on over to WSUoffer.com to check it all out. Sign up today and you won't miss a thing. That's WSUoffer.com.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.